Welcome to an introduction to accounting, brought to you by Parkbench Tutors and narrated by David Hopcroft. In this podcast we are going to take a quick look at value-added tax and the entries that you make for value-added tax in the accounts. Value-added tax, or VAT or VAT for short, is based on the difference between the value of outputs and the value of inputs. The tax was originally introduced into the UK in 1973 at a rate of 10%. At one time it actually went as low as 8%. But today, like all taxes, it just seems to have gone up, and it is now 20%. Here's how it works. The example, by the way, assumes that all the businesses concerned are going to be registered for VAT. A business whose turnover exceeds a particular amount per year has to register for VAT, and that amount can change from year to year. The threshold for 2012 was 77,000. If your turnover was 77,000 or more, then you should be registered for VAT. So, Phillip Forest Mills cut and saw and then sell £500 of timber to Covent Garden Buildings. Now they must charge VAT at 20%. So the price of the item is actually £500 for timber, £100 for VAT, that's 20% on 500, so the total with VAT is £600. We would refer to the £500 as the net price and the £600 as the gross price. That timber is now being used by Covent Garden Buildings, and they're going to make 4 garden sheds, and they'll sell these on to Chelsea Garden Centre for £250 each plus VAT. So the charge this time will appear as 4 times £250, which is £1,000. 20% of 1,000 is 200, so the total for the sheds with VAT is 1,200. The garden centre sells these sheds on to Potterington Town Council for £400 plus VAT for each shed. So 4 sheds at 400 each is £1,600. 20% of £1,600 is 320. So the total there is going to be £1,920. Now, how much VAT will each pay? We have 3 businesses and we have an end customer. So we have to look at the VAT for each of those, for the Forest Mills, for the garden buildings, and for the garden centre, and for the town council. Right, the Forest Mills, they didn't pay any VAT because they just chopped the timber down, cut it up, but they did charge £100 VAT. Covent Garden Buildings paid £100 and charged £200 on the sheds. Chelsea Garden Centre paid £200 and charged £300 on the sheds. Potterington Town Council, they paid £320 VAT, but they didn't actually sell anything. Okay, let's look at the difference each time. So the difference for the Forest Mills is that they charged £100 but they didn't pay anything. Covent Garden Buildings, they charged they charged 200. Chelsea Garden Centre charged 120. And you can see there then that what's happening there is that these 3 businesses are going to pay a total of 100 plus 100 plus 120, which is £320 of VAT. Right? So the difference adds up to 320. So the difference is the amount of VAT that each business must pay as a tax. And of course that total amount, 320, is the amount of VAT that was charged on the finished products to the customer. In practice, of course, that garden shed, to have made it, will have had nails, screws, hinges, glue, etc., all sorts of things. But the idea is still the same. It was just easier to show the VAT as if it was just relating to the timber there. Right, is VAT the same for everything? And the answer is no. There are 3 different VAT rates at the moment: a standard rate of 20%, a reduced rate of 5%, and a 0 rate of 0%. Those rates can change at any time, and the changes are usually announced in the budget. VAT, by the way, is payable to Her Majesty's Revenue and Customs. Now, can we set all the VAT that we pay against the VAT that we charge? The answer is no. There are some non-deductible VAT items, and two that you probably ought to know about are cars bought for use in the business and entertaining business customers. You can't set that VAT against the VAT that's charged. So, to show VAT in the accounting records, there are some standard procedures. Sales account have to record the selling price before VAT, in other words they exclude VAT, and expenses and assets accounts where VAT is recoverable also show a net amount, that's the amount before VAT is added. And that means that you need another account for VAT, and it's a control account. We have a nice simple example here. Roll and Rumble Furniture purchased 35 tables for 800 plus VAT, paying cash. So you would debit purchases with 800, you would debit the VAT account, the control account, with 160, and of course you'd credit the bank account with the 960 that you paid out for the tables. Office expenses for the month came to 600 including VAT. So the amount before VAT, the net amount, must first be calculated. So that's 600 times 100 divided by 120, which will come to 500. So the expenses then must have been £500 net plus £100 VAT. So we can now make those entries to the accounts. We'll debit office expenses with 500, debit the VAT control account with 100, and of course we'll credit the bank account with 600, paying for the expenses. We now sell 20 tables for 2,400 plus VAT. So the VAT is 2,400 times 20%, which is £480. So the total that we receive for the tables is 2,880. We can now make those entries to the accounts. We'll credit the sales with 2,400, debit the bank account with the 2,880 that we receive, and credit the VAT control account with the 480 that we charge to the customer. And if we now just look at the control account at this point, we have two debits, 160 and 100. We have one credit, which is 480. So if we take away the debits of 260 from the credits of 480, that means in fact that we owe the government as a tax at this point the sum of £220 for VAT. So those are the entries for VAT. That ends our short podcast on VAT, brought to you by Parkbench Tutors, narrated by David Hopcroft. Thank you for watching and for listening. For more information about Parkbench Tutors, look us up on Facebook, Parkbench Tutors, or we can be found at parkbenchtutors.com. We wish you success in your studies.